Hey everyone, welcome back to Corporate Decoder, the place where we untangle corporate filings so you don't have to. Today we're diving into ClearOne's annual report, and let me tell you, it's a bit of a mixed bag, kind of like finding out your favorite restaurant is having a sale, but only on the things you don't like. We will talk about revenue drops, potential delisting, and some serious doubts about the company's future. Buckle up. The report covers the fiscal year that ended in December. While some companies are showing growth, ClearOne's report paints a picture of a company struggling to stay afloat. First, let's talk about how much the company is worth. As of last June, the total value of all the company's stock held by regular investors, not the big guys, was only around $15.6 million. That's not a lot, and it shows the market's view of the company. ClearOne is listed on the Nasdaq Capital Market under the ticker symbol CLOO. However, it's facing some challenges. ClearOne sells conferencing, collaboration, and network streaming solutions. They're in the business of making it easier for people to communicate, whether it's through audio or video. They sell to businesses of all sizes, as well as individual consumers. Their products range from high-end audio conferencing systems to simple USB speakerphones. The company's main problem is that they aren't making enough money, and as a result, they don't have enough cash to meet their obligations. So, what's their plan to fix it? They're focusing on a few key areas, like continuing to innovate with new products, improving profit margins, and making their products easier to use and more compatible with other systems. This might help them navigate a tricky market. ClearOne competes in audio conferencing, professional microphones, visual collaboration, and audio-visual networking. They face a lot of competition from companies with much deeper pockets, making it a tough market to survive in. Let's look at the cold hard numbers. In 2024, their revenue was only $11.4 million. That sounds like a lot, but it's actually a huge drop from the $18.7 million they made the previous year. That's like losing almost 40% of your income. That's a huge loss in revenue. It is a big red flag in what is already a small company. The amount of profit they make on each product also went down from 34% to 23%. This is due to rising expenses, high transportation costs, and tariffs focused on China. All these things reduce their gross margins. Their operating loss, meaning the loss before taking into account interest and taxes, was about $9.2 million, which is about 36% more than the previous year. Interest income increased to $0.23 million this year, due to more investment in marketable securities, but the other income dropped significantly, going from $7.15 million. This is mainly because of a legal settlement and other income received last year, skewing the comparison. The markets ClearOne participate in have become very competitive due to new innovative solutions that offer similar solutions at a better price point. ClearOne is competing with many businesses having greater financial, research and product development, manufacturing, marketing, and resources. In 2023, ClearOne transitioned its manufacturing from China to Singapore. This transition impacted the company's ability to meet customer demand and resulted in lost revenue and damaged distribution channels. The move to Singapore has stabilized production capabilities. However, ClearOne must work to rebuild its distribution channels and regain customer trust. Like all companies, ClearOne faces a number of risks. The report lists some big ones, like possibly not being able to complete a strategic transaction. ClearOne needs additional funding to keep going, and they might not get it on good terms, if at all. Their auditors are worried too, expressing serious doubts about whether the company can continue operating. This is not a good sign. It means that if they can't find new ways to make money or get funding, they might not be able to pay their bills and could face some very tough decisions. ClearOne's stock price is low, leading to a possible delisting from the Nasdaq Capital Market. They need to get their stock price up to at least $1 to avoid this, but it has been under $1 for quite some time. They didn't hold an annual meeting last year, which is in direct violation of Nasdaq requirements. That's like forgetting to file your taxes. It is another issue with the company. Edward D. Bagley, a major shareholder, has a lot of influence. With almost half the company's shares in his hands, he has a big say in who's on the board and what decisions get made. This can be good or bad, but it definitely means he has a lot of control over the company's direction. Like many companies today, they're also worried about cyber attacks. Data breach could really hurt their business and reputation. Management admits that overall revenue decreased by 39% when compared to the year before. Audio conferencing product revenue is down, which is a bummer because those are their high quality core products. The company lists current contractual obligations coming to about $5 to $1 million. The company has seen drastic drops in net income, having more than 10 folded their losses, a whopping 1,4% increase in net losses. Now let's look at who owns the company. This is important because it shows who has the power to make decisions. We already talked about Edward Bagley, who directly owns almost half the shares. And lastly, the company signed another agreement with Dawson James Securities for strategic transaction consulting. Looks like they know that finding a buyer may be their best bet. Now, what does all this mean? ClearOne is facing some serious challenges. Their revenue is down, they're losing money, and they're at risk of being delisted from the stock exchange. They have great competitors, which is something that may or may not play in their favor. Their strengths: they still have some good technology and loyal customer base. Their focus on cost cutting and new product development could pay off. Their weaknesses: they're not making enough money, and they're heavily reliant on a few key distributors. Also, they need additional cash. ClearOne is a company at a crossroads. They have some good products, but they need to make some big changes if they want to survive. Keep an eye on those financials. It will tell if their actions are enough to get back on a growth path. Thanks for watching. If you found this breakdown helpful, please give us a like, subscribe, and let us know what company we should decode next in the comments below.